Hello. Welcome everybody to the Startup Academy. We are talking today about VC perspectives on EdTech investments in the AI era. And we have two incredible guests today, Jomayra Herrera from Reach Capital and Claire Zau from GSV Ventures. They are two of the most brilliant minds in the space, and they publish a lot about this incredibly fast-moving and exciting field. I welcome everybody. We're just going to let people trickle in for a few seconds, and then we're going to get started, and I will kick it to these amazing guests to introduce themselves. But my name is Alex Sarlin. I am the host of EdTech Insiders and co-founder of EdTech Insiders. We are a podcast and newsletter that covers the EdTech industry, and we've been very excited about AI for quite a while. It's really fantastic to have you all here today. I'm sure you can, look around at so many of the other people who are in this incredible space. There are going to be lots of founders, there's investors, there's people who are interested in this very fast-moving space. So with that, let me introduce and actually allow each of them to introduce themselves, our amazing guests for the event today. First, Jomayra Herrera from Reach Capital. Can you introduce yourself a little bit to our audience today?
Thanks, Alex. So excited to be here today. As Alex mentioned, I'm Jomayra. I'm a partner at Reach Capital. We're an early stage venture fund focused on education and the future of work. And before this, I have been at other venture capital firms, Cowboy Ventures, a generalist seed stage firm. Before that, Emerson Collective, the Jobs Family Office. But I did start my career on the operator side, working on an early stage ed tech startup.
Fantastic. And JaMarra is really one of the leading voices on the EdTech investment space in general and AI in particular. And second, we have Claire Zau of GSV. Claire, would you mind introducing yourself to the
Yeah,
audience?
thank you so much, Alex. Very excited to be here. I'm a VP on the GSV Ventures team, have been with GSV for about 4 years now, and based out of our New York office. I wear many hats across both our summit team as well as our investment team. Started out working very closely with the full team on our ASU GSV Summit program. And then on the investment team, cover a lot of our K-12 and pre-K focus work, as well as all things AI. And a little bit more on GSV for those tuning in. Also very focused on early stage education tech investments across what we like to call pre-K to grade.
Absolutely. And anybody who is not reading Claire's AI education newsletter on Substack is really missing out. Not only is it one of the most incredible resources about AI and EdTech, it's actually one of the most incredible resources about AI in general. It covers every new model, every new move from the big tech companies. Very much, very highly recommended. So the way this is going to work, we're going to do 30 minutes of Q&A between me and these amazing guests, and then 15 minutes of questions from the audience. But you can start putting in your questions anytime, and we will be monitoring them, taking care of them, and then we'll deliver them for the last 10 to 15 minutes of our talk today. So with that, let's get started. So we are in this crazy moment, and from a 10,000 foot view, let's just see how does AI and EdTech interact in this investing sector? We've seen some areas of AI and education really take off in terms of the number of companies being launched. There are areas like AI tutoring, AI study tools, AI teacher productivity, personalization through AI, infrastructure for schools, so many different areas. I want to ask each of you, are there specific areas that are attracting more interest and more capital, and why? Let's start with you, Jomayra.
Yeah, so the way that I would characterize it is the areas that are getting the most, let's call it attention and also capital, are ones where there is already an existing market, already a willingness to pay, and there is an acute pain point. And so AI tutors is a classic one. Right before we got on this call, we were actually talking about how we see these new AI tutor apps popping up every day on the App Store. And so AI tutor is a clear and obvious use case. And the reality is when there is a clear market need, willingness pay, a clear use case, you're going to see a lot of attention start to gravitate there, both from the entrepreneur side and also from the investor capital side. So that's one area. We're seeing a lot around like differentiation and personalization of content. And again, not a new market. There are existing large incumbents like Newzella's, of which we are investors. And we're seeing the new versions of Gen AI also popping up as well. And so that's where we're seeing most of the capital and attention going to. So basically existing markets. We're starting to see new markets pop up. So one of the areas that we've seen a lot of attention and investment go into is, let's call it teacher productivity or workflow tools. And so not really an existing budget line for a lot of schools and districts, but it is an acute pain point and an increasingly acute pain point as teachers are overstretched in terms of what they have to do. And there are major issues around even recruiting teachers in the classroom. And so we've also seen a lot of attention to those tools as well. I will say, like, the one gap or area that we've seen less, both attention on the investor and the entrepreneur side, are just truly Gen AI native apps, or what I call like the Uber for AI, which is it could not exist pre-Gen AI in terms of a use case. And so that's where we've seen a little bit less of a attention or white space.
That's really interesting. Yeah, it feels like the educator profession has been under fire now in various ways for many years, and hopefully AI is a reversal of that and providing teachers with all these incredible productivity tools to keep them in the profession and make their lives easier. Claire, what about you? What are you seeing from your stance at GSV? What areas are attracting attention and capital?
Yeah, I really love the way Jomayra put it together. I think very similar and along the same lines, with any startup, we kind of categorize into, is it in the bucket of being disruptive, completely new, or is it sustaining innovation, making something more efficient? And I do think if you look at the teacher co-pilots, the student homework help tools, a lot of those are basically AI versions of existing platforms. So if you think about Chegg as the, or Learneo, Course Hero as Photomath, even as the core homework help applications, you're now seeing a new generation of those same fundamental homework help tools, but with AI tools or AI features attached to them. I think another interesting trend we're seeing is a lot more investment on, at least in the K-12 world, a lot more investment on tools serving the adults in the room as opposed to student-facing applications. I think there's a very clear hesitation to unleash a lot of this AI into the wild and put it in students' hands before we understand how to properly implement this. And so seeing a lot of traction and usage in teacher co-pilots. Students are finding these tools themselves outside of the classroom. No one's stopping them. So the consumer student-facing tools are seeing a lot of traction. And then I would say probably school system or institution-facing tools that are trying to leverage AI to increase efficiency across the school operations or the institution. I think those are also seeing maybe a little less action right now, just because institutions are still in the early innings of a lot of this. They don't have official guidance and policy around what to buy. So that's kind of the high level dynamic that we're seeing.
Yeah, I love that segmentation of sort of AI tools by audience, which are for the students doing studying apps or scan and solve kind of things, what are for the educators and what are for administrators or schools to try to make their lives easier. I think, we're going to see all entrepreneurs of all types at the upcoming ASU GSV show, which is just a few weeks from now, and the AI Revolution Air show. I'm really excited to see all of these entrepreneurs sort of in the same space competing for some attention. One thing I really, and helping each other too. One thing I'd love to ask as a quick follow-up, and this is a loaded question, but let's see if we can get a really crisp answer. Let's say you're an entrepreneur listening to this who is in one of these areas. You're making a teacher productivity tool. You're making an AI tutor. How might you stand out if you know that there's a very red ocean? There's a lot of other companies in this space. JaMarra, how would you stand out to reach?
So I think I'll start off with just really quickly some context that I think may be helpful, which is if there is a good idea and a good market, it will get crowded. That has been the history of venture. When there was Zoom, there were a million other call applications. When there was Slack, there were also a million other chat-based workplace applications. And so it's going to happen, and especially if you're working on a good idea. I think the key is to clearly articulate, what do you know that other people don't know? Do you have some unique insight on the go-to-market, on the channel, on the buyer? Do you have some unique data? What is it that you know that is an earned secret by nature of your past experience, by nature of access that you have that other folks don't know? And I think clearly articulating that. I think the second piece, and this is particularly important with Gen AI, is just the velocity of shipping. You have to be incredibly fast in terms of shipping product because it is easier to build than ever before. And so I would say like those are the two ways to really stand out.
Yeah. How about you, Claire? What would you say to that?
Yeah, I would say I think in a very crowded market, make sure that you are avoiding the fate of being labeled as a AI wrapper. I think sitting on the other side of the table, we've seen a lot of companies that have fallen into this bucket of maybe, being perceived, even though a lot of work has been put into it, being perceived as a Gen AI wrapper or a weekend project type application. And I think we'll probably discuss a little bit on just the idea of micro companies, but it's clear that the bar of differentiation has just gone way up. It's a bigger question around how do you create something that has a ton of moat and has a lot of barriers for other people to not replicate that. I think it's no longer a story of whether other startups are building in the same space as you or if you have to move quick enough. I think there's actually an even more challenging dynamic where you have now incumbents playing in the same space and innovating with AI alongside new entrants. And so with this kind of David versus Goliath dynamic, there's going to be a lot of other great intelligent founders who have the same vision as you building alongside them. But you also kind of have to be cognizant of what big players and incumbents like PowerSchool and Structure roll out with massive distribution and with a ton of data and relationships with the schools that you might be selling to. So I think just always questioning yourself, like, how do I stand out among not only a crowd of great entrepreneurs also building along the same vision, but also how do I create enough moats so that a big incumbent isn't able to, throw 50 engineers at exactly what I'm building.
Fantastic answers all around, right? Find your unique perspective and your value. Ship fast, you have velocity, avoid being seen as a wrapper, and find a way to do moat against both incumbents and all these other companies in the same space. Easier said than done, but these are really important things for everybody here to keep in mind. So speaking of velocity and speed of innovation, one thing we have all seen when we follow this AI world is we're now, 18 months or so into the Gen AI revolution, and things just keep changing. NVIDIA just launched a new chip. OpenAI, Google, Anthropic, Amazon's getting involved. Everybody is just jumping into this, throwing huge resources into the AI space generally. I'm curious what this speed of innovation in the underlying technologies and models and chips has on your mentalities as investors. Does it mean that you are going to hesitate a little, stay on the sideline and say, everything's changing so fast, we're just going to wait and see? Or are you jumping in and saying, okay, well, I think we're seeing where the puck is heading and where things are going. We're going to invest in companies that also seem to see that. Claire, let's start with you on this one.
Yeah. When I think about this question, I always think about the kind of archetypal story of Jasper AI, which, a year ago, I was like, oh my gosh, how could we have not met with a company like Jasper? They're going to revolutionize AI writing assistants. And, I think it's a really good example of a company that garnered a lot of generative AI hype and attention. They reap the benefits of being first movers in the space. And you did see this massive hockey stick level growth. But you also saw, I think, alongside that, this massive overconfidence in the private markets for AI startups. And what ended up happening is AI writing assistants eventually became commoditized. Now you see it in, I'm pretty sure, a ton of education technology companies. It's part of every productivity suite. So I think there's a lesson in that there is a little bit of waiting and seeing. And it's good to, I think through whether certain applications become commoditized and later part of larger suites or tools. I also think another trend is just, I think that broadly in the venture capital space, a lot of money and a lot of the big, hyped up dollar amount size of checks are going into the more foundation and model layer applications. I think that's where the majority of investment is flowing into. But equally enough, application layer companies are very important. I would just say, I think when you look at those crazy $100 million pre-product seed rounds, those are typically going into those high compute businesses. I think for us, especially investing heavily in the application layer, it's an element of, I think, still going back to fundamental business requirements and looking for founders who we think can execute on a great vision and build a product that users love, and less so, just getting in front of the next big model or next big infra play.
Jomayra, same question. Are you watching to see where the field goes, or saying, I think I can see some patterns and we're going to jump in?
Yeah. So it's a little bit of both, in the sense that you can't really afford to wait it out and sit out when such a fundamental paradigm shift is happening. But a lot of research has shown that time diversification in your portfolio leads to better outcomes. And so that's the reason why generally, this was before the massive market boom or the bull market, generally you're deploying your capital in a portfolio across a 3 to 4 year time span. And there's going to be a lot of change that happens in that 3 to 4 year time span. And so that's how we kind of think about it. We're not sitting out, we're still investing, but we're diversifying our portfolio over time. So if you think, like, let's say we deployed all of our capital last year when everyone was saying GPT-3 can't actually do math.
Right.
And then a lot of the
Right.
advancements have been made around its ability to do math. If we had deployed all of our capital then, it would have been off of a false understanding of where the technology was going. And so the way that we think about it is we're actively investing, we're staying close to the market. We launched a program called AI Learning Catalyst, where basically we make smaller investments in really early stage companies for the purpose of, one, obviously building a relationship with those founders, but also learning about the market, understanding how it evolves. What are the unique data points that we need to be looking at when it comes to Gen AI? Because historically, things like momentum around revenue growth and customer growth used to be really important indicators. In a time when AI is in the zeitgeist and everyone's willing and excited to try new things, there's less signal in that type of momentum versus retention, stickiness, engagement has become critically important as you look at these tools over time. And so we're definitely actively investing. We're just thinking about, one, like, how do we think about size of check and capital relative to risk, especially given all the change that is happening, and then time diversification, so deploying over a longer period of time.
Yeah. It's a really good example about the math issue. There was like that moment where people were like, you know what? LLMs can't do math. And it was like 3 weeks later that they launched all the code interpreters, and suddenly code was involved and math was there. And it was like, wow, you're right. If people had made all their bets right then, it might have gone in really some strange directions. So let's dig into some of the investments that GSV and Reach have already made in the AI space. Let's, where the putting your money where your mouth is, so to speak. I'd love to hear each of you talk about a couple of investments that your firms have made, and maybe just explain some of the reasons why these companies and their ideas and their founders and their philosophies sort of appealed to you. Jomayra, let's start with you on this one.
Yeah. So I think it's worth actually talking about some pre-Gen AI craze companies that we invested in that were AI related, and then some that we've done post the Gen AI craze. So one of our portfolio companies is called MathPix, and they actually operate at the infrastructure layer. They are an OCR API a company that effectively is powering the Perplexity of the world, the Chegs of the world, the Anthropics of the world, and effectively allowing them to be able to take in and ingest things that are like charts, things that are numbers, and be able to actually output something that is useful to the consumer. And so we view a company like that as fundamental to allowing many of these other companies to operate. And so very critical infrastructure technology. And that investment was actually done pre the Gen AI craze. And as you can imagine, they've seen a boom and acceleration in the growth of their business post the craze. We're also investors in, we led the seed round for a company called CuriPod, which is based out of Oslo, Norway. And the way that I honestly describe it is it's the new Gen AI Nearpod, so operating in the lesson content delivery space. And for folks who know the story of Reach, we were one of the earliest institutional investors in Nearpod, and so saw their entire journey all the way up to their exit to Renaissance. Massive supporters and fans, obviously, of the platform and the team. And we saw CuriPod pop up, and we're like, this is an incredible, we know the market, we know the space, we know there's willingness to spend. And Gen AI has now created a new opportunity to create an even better Nearpod-like experience. And so we led their seed round last year and are super excited about it. Maybe the last one I'll mention is a company called Paloma, which helps with creating it leverages Gen AI to actually create a family engagement tool. And the founder there, Alejandro, actually was the former founder of Springboard Education. And so was doing a very similar thing, but more manual, less tech-driven in a nonprofit. And once they saw the ability to apply Gen AI around this problem, built out this app to help with family engagement in schools. And so we invested in that company at, I believe it was the end of last year. And so those are just a few examples of some investments that we've made in the AI space.
Yeah, fantastic. Quick pitch here. We just had Alejandro on the EdTech Insiders podcast. He was incredible. That was the most recent episode. And wow, it was really eye-opening, amazing experience there. So Claire, how about you? What has GSV been doing in the investment space? Where have you actually invested and why?
Yeah, I think it's interesting that JaMarra also brought this up, but I feel like it's important to remember that there's like no binary pre-Gen AI, post-Gen AI. It feels like a lot of venture investors have been putting money into this AI moment for a long time. And it's really only just been this kind of ChatGPT inflection point recently. So for us, we invested in companies like Turnitin, Gradescope, Lightside Labs, Smarterer, those that were kind of powering the more early AI companies. And so more recently, though, we've invested in companies like Chiron Learning, which is really focused on being able to scale your experts in a one-to-one format. And so if you think about your typical classroom, great learning happens through powerful classroom discussions. You often only have one teacher that has to manage an entire classroom of kids, all in various, there's just a ton of great variance in every single classroom. And so they're basically allowing you to use AI to scale a single teacher to support over 30 plus kids in the same classroom and essentially scale that personalized support. We invested in Amira pre-Gen AI, one of a fantastic reading and literacy AI play, Quillbot, which is in the AI writing assistance. They're part of the larger Learneo/Course Hero suite now. And then we also invested in a company called Speak, which is a little further along. They're focused on kind of complementing things like Duolingo and addressing the last mile of language learning, which is pronunciation and speaking. I think actually leveraging a lot of the interesting multimodal avatar and speech and language tech to allow anyone to have a language tutor in their pocket to practice pronunciation anytime, anywhere. So a lot of exciting activity. And then also just on the teacher front, as I mentioned earlier, just around the activity that we were looking at, Magic School, which is focused on being a teacher co-pilot. They've already reached, I think over a million teachers in the last couple of months. So just a lot of exciting AI innovation happening.
Yeah, there really is in all different areas. And, one of the things that gets me really excited about a lot of these companies is they have this impact lens. And that's something that is true for both of your firms as well, right? EdTech investors and all of us in education really care, excuse me, not only about financial outcomes, but also about learning outcomes, and especially learning outcomes for underserved populations. The US has incredible inequality in educational outcomes, and so does, a lot of the rest of the world. I have a question for each of you about this, which is, there's a debate about, is AI going to level the playing field by putting these incredible tools in the hands of students of all backgrounds? Or is it going to be yet another thing that only rich schools and rich families, have access to, and suddenly they can do these incredible things and everyone else is left behind. And I know that both of you personally and your firms care a lot about this. What do you think? Do you think that AI is going to make things more accessible and effective for students in underserved communities, or do we have to really fight against the current going the other way? JaMarra, I know you think a lot about this. I'm curious what you're thinking about it.
Yeah. So on balance, I believe that AI has the potential to drive large gains in both equality and learning gains for students. But there's a couple of key things that have to happen to really realize that potential. So on what makes me excited, I mean, if you look at some of the biggest drivers for inequality, it's largely related to access to people and services, access to tutors, access to great teachers, access to counselors. And what AI does is it makes it possible to actually replicate that type of experience in a true way, right? In a way that it feels more real, it feels more connected and more personalized. And so fundamentally, from a first principles perspective, we can assume or infer that it will allow us to provide better equity for students and better learning gains. That said, to fully realize that opportunity, schools have to provide and enable access to these tools for students. So schools that are banning access to AI or treating it as something that students shouldn't or can't use, they're setting their students up for failure because AI is here whether they want it or not. And students are going to be expected to leverage and use AI, especially when they enter into the workforce. And so if we're not giving them access to those things, then we absolutely will widen the gap between students. And so I think that is a critical lever to ensuring that students can fully realize that potential. But from a first principles perspective, I think we can assume that it creates a lot of exciting opportunities to drive real learning gains and equity outcomes.
Yeah, Claire, I know you care enormously about this too, but you mentioned micro companies, and we're running low on time, so I really want to ask you about this one as well. So maybe we can come back to the equality later in the questions, but let's talk about micro companies quickly, which is, one of the things that's really interesting about this AI moment is that a few different kinds of founders are able to jump into the space in a way that we really haven't seen before. One we've seen a lot is AI experts, people who just got their machine learning, PhD, or coming out of Google or Meta. And we're also seeing teacherpreneurs, people coming out of the classroom saying, oh my gosh, these tools are so powerful. You mentioned Magic School started by a teacher. We can do incredible things for teachers with these tools. And they come from sort of different, almost exact opposite places. One is getting these powerful tools from the ground up. The other is trying to build the tools. Can you tell us? And both of these are creating these sort of micro companies, right? Both of these are types of profiles are creating companies that can get really big with very few people. Can you tell us about these profiles and the micro companies you're seeing and what you think this is going to augur for the field going forward?
Yeah, definitely. I think it's actually you mentioned in a podcast, Chamath was like, there's a reasonable case to make that all VCs are potentially going away because there's going to be a world of two-person powered AI startups. And I do think there is some validity in the idea of these micro companies emerging. With AI apps, you can run much more nimbly than a traditional SaaS startup. Especially with the advent of things like agents, that technology is still evolving, but you can, not only keep the team lean, you can leverage AI to do the work of an army of coders. You can also do this while raising a fraction of capital of traditional venture capital and still hit profitability. So, I think there's a lot of ingredients that could make the rise of these micro companies very successful. I think also calling out specifically on building companies, Devin AI just released a really interesting demo where, you no longer have to hire an entire team of software engineers. You can almost leverage an AI agent software engineer to build the workout for you. You just input natural language text and say, hey, I want a dashboard that has XYZ qualities, build it out for me. And then you can also use natural language to continue to edit that. So just really expanding the breadth of different skill sets that a founder can tap into, as opposed to having to raise traditional venture capital to scale out and build out a full team. So it's really exciting. I think we're interested in meeting these companies, and I think even just an example, we met with one of these AI student help, tutoring help, homework help companies, and I won't name them, but they were only in a couple months of existence, and I think 8 months in had already scaled to something like 3 to 4 million in ARR, which you don't really hear outside of the AI moment. So there are those micro companies emerging.
Yeah, and some are growing through social media, some are going through teacher networks. It's a really wild moment. And you have people like Rajan from Chiron Learning, who's coming from the other side, coming out of Google, having done tons of AI there and able to start a company and get it to grow too. That is the end of our formal questions. There's so many more things we could talk about, but let's take a moment to get a word from our amazing sponsor for this Startup Academy, Cooley. We're going to pass it to Eric Edwards from Cooley to talk a little bit about AI and what they're doing there.
Thanks, Alex, and thanks to GSV. And looking forward to seeing everyone in person, hopefully in a few weeks, down at the conference. I'm Eric Edwards. I'm a partner at Cooley, which is a large global law firm. I'm also the chair of the EdTech practice and part of the Emerging Company and Venture Capital Group. For those of you who don't know, we have the largest EdTech practice in the world and do the largest amount of transactions in the EdTech sector. And as a result, I'd love to share some of the data and market trends that we are seeing. Obviously, we're talking about AI a lot today, and that happens to be the bright spot. But there are some bad news and some good news. And maybe I'll start with the bad news, which is we're seeing the lowest amount of invested capital that we have seen since Q1 of 2017. That's unfortunate. However, we believe that that's probably we're at the low point. And just to give you some data points, we had 2.2 billion invested in Q3 of 2023, and that decreased down to 450 million for Q4 of 2023. The deal volume has also gone down significantly. All stages of financings, except for Series C, have decreased in the last quarter of 2023. However, the bit of good news here is that for the most part, Series C deals and Series A deals have remained relatively constant. They're slightly decreased, but the valuations have largely stayed in the range that we have been seeing over the last 18 to 24 months. And that being Series C deals in the $12 to $25 million range, Series A deals being in the $35 to $45 million range. Contrast that with 2021, then when they spiked up to the $70 million range for Series A deals. So we have seen a little bit of depression, but the amount of deals in Series C and Series A have remained relatively constant. The funny line, I guess, that everyone's hearing now is the new up round is a flat round. And so we're seeing a large number of flat rounds going on. And the use of convertible notes and safes are being used at an all-time high, especially for seed deals. Additional side letters for rights for investors is being negotiated at a rate that we haven't seen before as well. And so those are the mechanisms that we're seeing in the market. I have a lot more information I know I want to share with you guys, and I'm happy to answer any questions if you want, but I have limited time and I need to turn it back over to Alex, and we're going to do a little bit of Q&A. So thanks, Alex.
Thank you, Eric. That's really interesting statistics there, and good news and bad news in the space as always. But hopefully, AI is really keeping things moving in a lot of this crazy times. So, got a lot of great questions from our audience today. I'm going to ask each of you, if possible, to do a relatively quick answers to each of these, just so we can get to a few of them. The first is for you, JaMarra, which is, can you share a few more examples of what you meant by Gen AI native, or that idea of Uber for Gen AI, like things that can only exist because AI exists? I thought that was really interesting as well, and people want to hear more about it.
Yeah. I would say if I knew what the ideas were, I would be funding them or building them. But what I meant by that statement was Uber was made possible because not only the advent of mobile, but also the possibility of having GPS right on your phone, right? Like that is what made it possible for you to be able to say, hey, I want a ride now, and that ride to show up to wherever location you are. And then be able to navigate you and track you where you want to go. And so it is because those enabling technologies exist that made something like Uber possible. And I would say right now, a lot of the existing workflows that are being enabled by Gen AI are things that already exist, right? So a lot of the AI tutors, for example, there was a photo map before. There were plenty of tutoring kind of snap and get an answer opportunities before. Now with Gen AI, these companies are better, they're faster, they're more accurate, maybe they feel more personal, they may feel more human, but they existed before in terms of a workflow. The workflow of actually calling a car to your house was not a workflow that existed before. And so that's what I mean by like a Gen AI native type of tool. We've seen less of those and actually have not really seen those yet in the education use case. And I'm excited to actually see what those look like.
Yeah. It's a great answer. It's a really interesting time, and I think we're all trying to find those use cases of, what is AI enabled that we never imagined before? What's new because of this medium or this technology? Claire, next one is for you, and this is a sort of a broad question, but I think you have some really good answers. We're in this strange moment with AI is creating all these new companies. What do you think is the best go-to-market strategy, or what would you say to companies who are trying to figure out their go-to-market strategy in this AI era? Is it that bottoms up, go find all the teachers and get them to use your stuff for a freemium? Is it top down, get those district sales? Is it getting in front of students through social media? Like what kind of strategies have you seen?
Yeah. I would maybe piggyback off of the framework of, what JaMarra mentioned around just creating completely new businesses and existing workflows. I think those require two very different approaches. If you're building something, particularly that's AI native, that hasn't really existed before, and whether that's teachers, students, parents, families aren't familiar with, I think it's really important to actually take a step back and make sure you're educating your users about a product. So I think, for example, not only, if you're selling to a school, making sure that they understand exactly what the product is, what the AI is touching in terms of data. I think there's a lot of AI education that needs to go into selling your product and teaching your stakeholders about what exactly this is. I think on the flip side, if you're you're selling a service that is automating and improving an existing workflow, I think it's important to really just hone on how much ROI this serves. So is it just AI for the sake of AI? Can something I already use and something that my teachers have already spent the last 10 years using replicate and create a similar feature to this? I think it's really important to double down on why your process is improving greater efficiency. I also think particularly in this investment era, I think Eric mentioned it, it's tight on funding. And so for that also goes downstream into what B2B companies or schools are buying. And so they're really looking for products that are painkillers and not vitamins. So again, not just AI for the sake of AI and a nice to have and funding that they can experiment with, but something that is actually going to, save user time, create value, and all of that. So
Yeah. I'm going to try to combine two questions. This is a little bit of flying by the seat of our pants here. We'll see if this works, but this one's for you, JaMarra. So building off this sort of go-to-market strategy and how to get the ROI and how to really, get into the markets in a clean way. People are pointing out a couple of obstacles to that, right? One is that a lot of schools are cracking down on AI, right? For student and instructor use, they have policies in place that are trying to figure out their policies, and there's privacy issues, and so one question is, how should companies think about these barriers that are coming from the school and university level? Will they change? And then a related one is there's also the free versus paid issue, right? I mean, we are seeing some universities create their own GPTs. And the reason they're doing that is they want every student to have access rather than it being $20. If you have $20 a month to spend on it, you can be a better student. That feels very unequal. So let's talk about the money barrier and the security and privacy barriers from schools and see if we can combine those. It's a little crazy, but let's try.
All right, I'll start with security and privacy, which is right now we are in the Wild West of regulations and rules around security and privacy. And What we know is it will get figured out. It's a knowable thing. It is a matter of what is the time frame that it will take to actually figure it out. And so what I suggest to founders is one, stay on the side of being as thoughtful as possible when it comes to things around student privacy. And there's a lot of resources out there. The nonprofit AI for Education has put out a lot of resources, for example, out there on how to be thoughtful and responsible around student data and student privacy. And so there are resources on that. So stay on the smart side of those things. And as Claire was mentioning before, do a lot of education of your users, because part of the challenge is actually more optics than reality, which is I'm nervous because there's this new technology. I don't know where this data is going. I don't know how it's going to be used. It feels like a black box. And so you have to do some education that was maybe previously not as necessary when you're selling typical or traditional software into schools. And so part of this is you're an early mover in a market that's moving really quickly, and you have a consumer that doesn't have the time to actually dig into the details. So you do have to, one, take a much smarter approach around being thoughtful around regulatory pieces, security pieces, but two, also do the work to educate your consumer. On the money side, I think the truth is, if you're solving a big enough and acute pain point, you will find access to money. And that is I know that sounds hard to hear, but there are plenty of companies in the space that have not had any challenges monetizing and getting users to pay, and not just consumers, getting schools to pay for the software. I won't name a specific company, but they're selling, when I looked at what their ACVs were on the school side, they were higher than we've seen for many freemium products of the past for a school side ACV. And so there is willingness to pay when you're solving a real pain point. So I don't necessarily, yes, school sales are hard, institutional sales are hard, of course. But I don't totally buy the argument that there isn't willingness to pay, because we've seen it happen.
Yeah, that's a great point. ACV, average contract value, right?
Yes, average contract. Yes, exactly.
Yeah, no, totally. And I think one of the things that's inherent, sort of subtext of your answer as well, is if the school or the university is paying for an AI tool, that does provide free access usually to the students within them. So in terms of the barriers that are set around money, it's sort of, if you're B2C, there's a barrier in there, but if you're selling to a school or a district or university, that actually in some ways overcomes that fee barrier by allowing the schools and universities to pay for the tool. So there's some funny dynamics in place there, but they're interesting. This next one is for you, Claire. We've had a couple of questions about other big edtech markets, especially India. And I know that, GSV has been spending a lot of energy and time looking at Indian edtech. So how are you thinking about AI and edtech outside the US, specifically in India?
Yeah, so we have about 9 investments in India. We just came off of hosting one of our mini AC GSVs in India with Emeritus. And we're very excited about actually how a lot of our non-AI native companies are leveraging AI to increase operational efficiencies. They're using AI in really interesting ways, almost more internally as opposed to rolling them out in the form of AI offerings and products. I think, specifically on India, it's been interesting. There are over, I think there are over 80 or so Gen AI companies that have popped up in the India edtech ecosystem, which is really exciting. We laid that out in a market map. So there definitely is activity. I think the government has been encouraging of AI activity. They did put out a statement that they were going to restrict model development in India, but quickly reversed that. And so I think there's all the right ingredients for a very thriving, ecosystem. I think, on GitHub, India as a nation has one of the highest commits from any country in terms of developer projects. So just really exciting activity. I think one company to specifically call out is PhysicsWallah, which they're actually, I think, doing a lot of really interesting things around just tinkering. And if you do have massive distribution like they do, that's a really good way to kind of test your way into what works. So they have everything from implementing an AI solver to, an AI tutoring assistant to a teacher-facing application. So really just experimenting with everything from avatars to kind of the traditional offerings you're seeing in the market today.
Terrific. Very thorough answer. I really like that. So we are at the end of our time. Unfortunately, there are still some terrific questions in the queue, and I had more questions I wanted to ask you both as well. Well, we'll do our best to sort of answer those in future sessions, or maybe we can do something on LinkedIn, post some of these questions and answers as well. Thank you all so much for being here. This has been a really interesting, very fast-paced discussion, and I think we covered a lot of ground around the AI and education and EdTech ecosystem. Thank you all for being here. And it is, thank you for Cooley. Thank you, Cooley, for sponsoring this amazing event. Thank you to GSV and Reach Capital. And thanks especially to our guest, Jomayra Herrera from Reach Capital and Claire Zau from GSV Ventures. You have to read her newsletter. Thanks so much for being here. And we'll see you all at the Air Show and at ASU GSV in just 2 weeks or so, 2.5 weeks. See you all then.